Good evening and welcome to BATV News. I'm Andrew Laidley. The Bank of Jamaica says inflation for April 2017 was 0.3%, which was primarily driven by increases in transportation, food, and non-alcoholic beverages. Here are the numbers. Based on the central bank's report, the increase in transportation was largely due to the impact of the upward adjustment to the SCT levied on fuel and an increase on motor vehicle license fees. Food and non-alcoholic beverages was higher, largely due to increases in processed food prices. Meanwhile, upward inflationary pressure was partly offset by a reduction in the housing, water, electricity, and gas division due to lower electricity rates. The BOJ notes that for May 2017, inflation should mainly reflect higher prices for food and non-alcoholic beverages as a result of an increase in both processed and non-processed food prices. While the June inflation forecast is expected to mainly reflect higher prices for food and non-alcoholic beverages as a result of an increase in agricultural food prices associated with the impact of the flood rains. In the meantime, transportation and housing, water, electricity, gas, and other fuels are expected to reflect higher petrol and electricity rates, respectively. The central bank says inflation in July 2017 should mainly reflect higher prices for food and non-alcoholic beverages and transportation as a result of expected increases in non-processed food prices and petrol rates, respectively. The BOJ says inflation for fiscal year 2017-18 is still projected to fall within the target range of 4% to 6%. In terms of domestic demand, the BOJ records mixed for the review period. The real value of imports is estimated to have declined by 2.3% for the 3 months to April 2017. For the 3 months ended March 2017, the 12-month average of the real value of debit and credit card transactions accelerated to 5.8%. Meanwhile, RADA's forecast suggested that the supply of most starches and vegetables were increasing relative to the previous month. In this regard, the prices of these commodities declined marginally compared to March 2017. For BATV News, I'm Andrew Laidley. Prime Minister Andrew Holness is encouraging private investors to develop underutilized assets around the country. He says such investment would contribute to economic growth by boosting the productivity of underutilized land and infrastructure. Mr. Holness notes that in the corporate area there are pieces of property that have depreciated in value and need to be developed. The Prime Minister was speaking at Guardian Group's groundbreaking ceremony yesterday for the construction of an apartment complex at 9 Musgrave Avenue in St. Andrew. Prime Minister Holness praised the Guardian Group for moving to develop the land, which was idle, into housing solutions for Jamaicans. He said the company's step into them very first real estate development project will add a tick to the growth counter. The Prime Minister further noted that Guardian Life's decision to make this major investment is a confirmation of confidence that Jamaica is making the right decisions as it moves along its path to growth. The Prime Minister said it's for this reason the government has made significant investments in building the confidence of the business sector. Meanwhile, President of Guardian Life Limited, Eric Hussin, said the company's decision to venture into real estate development has been well considered and well timed. Meanwhile, Minister without portfolio in the Ministry of Economic Growth and Job Creation, Dr. Horace Chang, said the project is in line with the government's thrust to provide affordable housing solutions, especially for young professionals. In the meantime, Member of Parliament for South Eastern St. Andrew, Julian Robinson, also welcomed the investment, noting that it's an excellent development for the area and a sign of confidence in our economy. The development, which is dubbed the Hampshire, is an environmentally friendly 7-story apartment complex. The complex will sit on 1.23 acres of land, comprising 66 apartments featuring internal laundries, balconies, metered utilities, and individual power generation for each apartment. Also included are private storage facilities, water storage tanks, adequate parking, 27,000 square feet of space for recreational activity, a pool on the upper deck, as well as an elevator. Prices for the units start at $18.8 million. The project is expected to be completed by the end of 2018. The KLE Group has released its annual report for 2016. The group says for the fiscal year, it met all its financial targets, including sustained profits, reduced expenditure, and instituting more streamlined business strategies. Anthony Morgan reports.
The KLE Group says it recorded an operating profit of $172 million for 2016, which exceeded the previous year's loss of $34 million. The company says a plethora of factors contributed to these results, including prudent financial management, strategic decision-making, and the diminished initial impact of divesting Famous Nightclub. The company says it has achieved a turnaround that positions it for further growth and sustained profitability. It says ongoing restructuring efforts have led to greater efficiency in the company's operations, adding that the management of Franjam, its franchisor company, has proved to be a great success for the Tracks and Records brand, which will soon open a third location in Montego Bay. That's set to happen by the second half of 2017. Meanwhile, KLE says successful efforts to streamline the company have allowed them to maintain a strong focus on the development of the BESA project and its franchising model through the company's stake in Franjam. The group says for the period under review, total revenues amounted to $196 million compared to $174 million in 2015, an increase of more than 12%. But the group says, like 2015, the cost of sales continued to decrease, moving from $68 million or 40% in 2015 to $63 million or 32% in 2016. It says the improved supply chain, menu restructuring, and new pricing strategies have, however, kept the cost of goods sold at an optimal rate despite economic pressures. In the meantime, KLE adds that the overall expenditure and liabilities have decreased, while cash flows have increased from the previous year's negative balance of $1.3 million to $6.2 million in 2016. For BATV News, I'm Anthony Morgan.
Still to come, the government outlines plans to regularize informal settlements in the second city. The details after the break. Welcome back. Director of Planning at the St. Municipal Corporation, Trevion Manning, says the government is focused on ridding the city of informal settlements, which is one of its biggest challenges. He was speaking on a few of the development plans for the city at Build Expo 2017 held at the Montego Bay Convention Center. Amita Prasad-Webb reports.
Planning Director Trevion Manning says the government is working to regularize informal settlements in the city of Montego Bay.
Montego Bay has its challenges, and one of those, we have the most informal settlements in Jamaica as well. So these historical data, that is, we are now working with the government, has put it as a major emphasis in the regularization of these informal settlements, and we are working closely with them on that project. So there's the NHT, Ministry of Housing, there's, as you heard, for those who were here earlier, about HAJ with the regularization of the flanker community. Lilliput has also been done already.
He says the Canterbury area is one of the main targets for 2017.
The UN Habitat is working with the Inter-American Bank and ourselves and the Ministry of Economic Growth and Job Creation, and we'll be focusing on that area along the North Gully as well, because that is a major environmental area, climate change impact, because all the North Gully is a major drainage area.
The planning director also adds that there are plans to redevelop the waterfront park in the city.
UDC owns the land, what we call Dump Up Beach. That area, and with our other partners, TF, it was launched. We were working closely to have our own Emancipation Park in Montego Bay, which is the waterfront park. It is a fully integrated. We are ensuring that it has the latest energy features in terms of solar lighting, dimmer lights. You will hear a lot more about it. So we are also ensuring that we have green spaces for our citizens, not so that the relaxation, etc., can take place.
For BATV News, I'm Amita Prasad Webb.
A study to examine the value of the diaspora to Jamaica's development will be launched on Jamaica Diaspora Day tomorrow, which is celebrated locally and globally. The designation of Diaspora Day emerged from one of 7 resolutions put forward at the first historic biennial Jamaica Diaspora Conference held in Kingston in 2004. This culminated in the issuance of a proclamation on June 14, 2005 by the then Governor General, the late Sir Howard Cook. The day is to be celebrated annually on June 16. The proclamation requested the support of Jamaicans at home and abroad for the activities of the Jamaican diaspora. The study launch is being jointly undertaken by the Caribbean Policy Research Institute, Capri, and the Jamaica Diaspora Institute, JDI, with support from the Jamaica National Group. Capri Research Officer Shanique Smart says some of the findings of the study will be shared at the upcoming 7th Jamaica 55 Diaspora Conference, slated for July 23 to 26 at the Jamaica Conference Center in downtown Kingston. The study is one of the main events to mark Jamaica's 55th anniversary of independence. Explaining the reason behind the study, Ms. Smart notes that there is the need for a comprehensive collection and representation of the true value of the diaspora. She says the aim is to empirically justify the perceived value of the diaspora to Jamaica. She adds that while there is consensus that there is value, researchers want to put a number on that value. Ms. Smart points out that the data will show whether there is economic value that the government is not exploiting and what can be done to get the value that exists and the best strategy to get it. Ms. Smart, who is the lead researcher on the project, says survey questionnaires have already been issued in the diaspora. The survey seeks information about the impact of the diaspora on individuals, organizations, and countries. More focus is being placed on training individuals in the delivery of quality food options. Chairman and CEO of Quality System Solutions and Initiatives QSSI, Major Hugh Blake, says the launch of the Institute's newest location in Kingston will help to improve the quality of exported goods. More in this report. Major Hugh Blake says businesses which export to markets in North America and Europe are set to benefit the most, as the certificates awarded by the Institute are internationally recognized.
I think it's very important for Jamaica, in particular companies that are looking to export food products overseas. They need to have internationally recognized certification, particularly if you're going to North America and Europe, and that is what QSSI provides.
He says the new facility has the capacity to train a significant number of people at one time, which is an improvement from its previous location.
QSSI will be able to, through the Training Institute, train a number of different organizations and businesses and so on. It has a capacity to train quite a lot of people. I mean, the facility can train at least 16 persons in any one go. It's a variety of courses in important areas such as risk management and even disaster mitigations and so on. So it is going to be a very useful tool for businesses.
In the meantime, Managing Director of QSSI, Cheryl Anderson, says the Institute is not stationary. She says QSSI has mobile training forums and has a notable presence in other Caribbean islands.
Our training institute is located in Kingston, so they'll be coming to this office for the training, but we also go into the country, such as in Montego Bay area, and actually conduct training. Interestingly too, though, we have a regional footprint, so we go to different islands within the Caribbean, such as Belize, St. Lucia, St. Vincent, Grenada, to conduct training in those countries.
For BATV News, I'm Andrew Laidley. Stay with us. Regional and international stories are next. Welcome back. It's time now for regional and international news. 4 months after the historic opening of the Argyle International Airport, the Vincentian government is reporting substantial losses after they chartered airlines for the official opening. The government had chartered Trinidad and Tobago's national carrier Caribbean Airlines that provided a service from New York, and Sunwing, which provided a flight from Toronto. Prime Minister Dr. Ralph Gonsalves told parliamentarians that the government spent close to $1 million Eastern Caribbean dollars on chartering the aircrafts, but that it recovered less than half the amount in ticket sales. However, Dr. Gonsalves said the funds came from the budget of the Tourism Authority, and therefore the government was not expecting to recover the funds. The Prime Minister also said it was a policy decision intended to attract more businesses to the multi-million-dollar airport, which opened 6 years behind schedule. But his comments were in stark contrast to earlier statements made by head of the Tourism Authority, Glenn Beach, who had predicted that tickets would have sold out within 1 hour of going on sale. In the meantime, Dr. Gonsalves has maintained that the move was in the country's best interest and has prompted a query on whether the government will continue to charter planes. The Brazil nut is Bolivia's most important organic export product. Nearly 25 million tons are exported mainly to Brazil, the United States, and Europe every year. But massive deforestation and the lack of rainfall allegedly caused by climate change have seriously affected this year's harvest, causing thousands of families to struggle to make ends meet. Al Jazeera's Mariana Sanchez reports from northern Bolivia.
48-year-old Adan Chapiamo has been picking Brazilian nut seeds since he was a child. He says he's never seen such fruitless trees in his lifetime. He usually collects 180 sacks per season. This year he only filled 20.
I thought about buying some cattle and investing in my paddock, as there was almost nothing on the trees. Some of them didn't even have one single fruit.
Adan says the seeds didn't grow enough to sell. He says he's only made about 1/10 of his yearly income. The Bolivian government says nearly 60% of this year's national harvest has been lost. Some experts say that deforestation is contributing to this downfall. Others believe the lack of rain last year, a result of abnormal weather patterns, is the cause.
This is a direct result of what was expected, a dry year because of the transition from El Niño to La Niña phenomenon. I think it's a natural climate variability that's more frequent and perhaps heightened by the climate change factor.
The Brazilian nut is one of the tallest trees in the Amazon. It's a protected species. The seed is one of Bolivia's main export products after gas, oil, minerals, and soy. Nearly 25 million tons are exported mainly to Brazil, the United States, and Europe every year. 1/2 million people in northern Bolivia are involved in the chain of production and commercialization of the product. Villabella community leader Héctor Suárez says almost everyone in this region lives on this product. Now they're figuring out how to support their families.
Many of us are just trying to get bank loans. We can only get around $500 to support our families for the next 2 or 3 months.
Adan Chapiamo says this year there's been more rain. He says he's encouraged. He can already see the fruit growing.
Farmers say they have to wait to start collecting the fruit. It's illegal to climb the trees, so they say they have to wait until the fruit falls on the ground, and that could start in October.
Until then, they just have to hope for nature to grant them a good harvest, as it always has done. Mariana Sanchez, Al Jazeera, Villabella, Bolivia.
Oil prices have dropped close to 6 months low under pressure from high global inventories and doubts about OPEC's ability to implement agreed production costs. Sonia Legg reports.
As one tap goes off, another turns on, and oil prices are feeling the impact. Brent crude fell below $47 a barrel on Thursday, its weakest in 6 weeks and close to 6-month lows. US light crude dropped close to $44. OPEC's plan to tackle oversupply is under threat for 3 reasons.
First, that the United States has demonstrated that every time the price goes up, it pumps more oil. Secondly, there is less demand than had been anticipated. And thirdly, even within OPEC, there is not full compliance with the premise that there should be cuts. So, for example, we have Nigeria, Libya and Iraq pumping more oil than had been expected.
OPEC and its allies, including Russia, have promised to restrict output until at least the end of the first quarter of next year. But inventories are near highs in many parts of the world.
I do worry that the OPEC deal will collapse because they are wearing the hair shirt of reduced production and therefore reduced revenue in anticipation that this will lead to firmer prices. If they find, however, that reduced production simply gifts benefits to third parties, that does mean that the deal is very dangerous.
While OPEC, Russia and others have agreed to reduce output by 1.8 million barrels per day, the US has raised its daily rate to 9.3 million. That means production in the States has now increased by 10% over the past year. And it's not stopping there. OPEC predicts America will increase output by 800,000 barrels a day in 2017. The International Energy Agency now sees supply continuing to outpace demand next year, even though daily consumption is expected to hit 100 million barrels for the first time.
The Bank of England has shocked financial markets, saying that 3 of its policymakers had backed an interest rate hike. As David Pollard reports, it's the closest it's come to raising rates since 2007, despite signs of a slowdown in Britain's economy.
It was a welcome surprise for sterling, if not for UK stocks. 3 policymakers voted for the Bank of England to hike at its latest meeting, the closest it's been to doing so in a decade. The pound shot up a full cent on the news. Britain's FTSE 100 index extended losses to hit a session low, down 1%, though many in the markets can't see a hike anytime soon.
We now have uncertainty in spades, and therefore I suspect Mr Carney will wish to keep rates on hold, certainly this year, maybe next year, and indeed possibly through 2019 as well.
The bank, though, is in a dilemma. Inflation pushing higher, it's now at 2.9%, but real wage growth slipping, as is retail spending. Sales were down by a much bigger than expected 1.2% in May.
The cost push element of that inflation acts on consumers' pockets in exactly the same way as a tax hike would. There is less money left for everything else, hence demand goes, hence some retailers are producing disappointing results.
Furniture maker DFS on Thursday warned of a dip in demand denting its profit outlook in what are uncomfortable times for the UK's ruling party as evidence of Brexit damage to the economy mounts up, even before Brexit itself.
Brexit is going to be messy. Do not anticipate that the Remainers in Europe will be kind to the UK in terms of formulating a deal that could be regarded as good news for the UK economy.
After last week's inconclusive election result, UK Finance Minister Philip Hammond is under pressure to move the UK towards a more business-friendly, so-called soft Brexit. One that may make conditions more friendly for British consumers, too.
Talking Stocks is after the break. Stay with us. Welcome back. Time now for Talking Stocks. 46 stocks traded today, of which 12 advanced, 27 declined, and 7 traded firm. The main JC index declined by 1,963 points to close at 233,940. The junior index also declined by 10 points to close at 3,178 points. Over 13 million units traded, valued at more than $268 million on the Jamaican dollar market. And on the US dollar market, over 47,000 units traded, valued at over $40,000 US dollars. Radio Jamaica, with over 7 million units changing hands, accounted for 54% of the market volume. NCB Financial Group was second with over 2 million units trading. JMMB Group, 7.5% with over 1 million units trading, accounted for 6% of the market volume, crossing the floor. KLE Group was the top advancer, up 6 cents to close at $2.16, followed by T-Tech up 10 cents to close at $8.06, and Nuts for the Express Services up 18 cents to close at $16.37. The main decliners were Barita Investments losing $1 to close at $6, followed by Separate Group down $3.57 to close at $25.43, and Caribbean Flavors and Fragrances down $1.46 to close at $10.54. And that's all the news we have for this evening, but before we go, a recap of our top story. The Bank of Jamaica says inflation for April 2017 was 0.3%, which was primarily driven by increases in transportation, food, and non-alcoholic beverages. Thanks for watching. For more content, visit our website at batvja.com. I'm Andrew Laidley. Pleasant viewing.